Signal line crossovers are the most common MACD signals. The signal line is a 9-day EMA of the MACD line. As a moving average of the indicator, it trails the MACD and makes it easier to spot MACD turns. A bullish crossover occurs when the MACD turns up and crosses above the signal line. A bearish crossover occurs when the MACD turns down and crosses below the signal line. Crossovers can last a few days or a few weeks, depending on the strength of the move. Due diligence is required before relying on these common signals. Signal line crossovers at positive or negative extremes should be viewed with caution. Even though the MACD does not have upper and lower limits, chartists can estimate historical extremes with a simple visual assessment. It takes a strong move in the underlying security to push momentum to an extreme. Even though the move may continue, momentum is likely to slow, and this will usually produce a signal line crossover at the extremities. Volatility in the underlying security can also increase the number of crossovers. The chart on the screen shows IBM with its 12-day EMA, green 26-day EMA, red, and the 12, 26, 9 MACD in the indicator window. There were 8 signal line crossovers in 6 months. 4 up and 4 down. There were some good signals and some bad signals. The yellow area highlights a period when the MACD line surged above 2 to reach a positive extreme. There were 2 bearish signal line crossovers in April and May, but IBM continued trending higher. Even though upward momentum slowed after the surge, it was still stronger than downside momentum in April to May. The third bearish signal line crossover in May resulted in a good signal.